When purchasing something, especially for your business, you probably want to know what the return will be on your investment. The ROI your clients want to know what their return will be too. Unless you consider and communicate the likely returns they will experience, you are missing a crucial piece of communication with them, making their decision more difficult. More importantly, you need to present the ROI in terms that matter to the decision maker. Having a wonderful tips booklet or other form of bite-sized brilliance is not enough. It must have value to someone, or it simply doesn't matter. They measure value in various ways. These are among the more common approaches. Financial ROI. How much money will using your bite-sized brilliance products as a marketing tool or a direct income stream generate directly or indirectly? Certain decision makers measure their return on profit only, or gross revenue, or the amount of increased market share, or some other industry calculation. The only way you know what matters and how they calculate it is to ask. Certain buyers require a multiple of their investment. If they expect less than 5 or 10 times what they invested, for instance, they are not inclined to spend their resources on your offer. It may also need to be within a certain time frame for them to proceed. Percentage ROI. While one company measures ROI in specific currency, someone else will be very content with a percentage of increase in their practice. A consultant practitioner or coach seeks a full practice, by their definition, that generates many fewer dollars than a big company product launch or a non-profit membership drive. Success is defined differently in each environment, equally valid for the person measuring the return on their investment. Promotional ROI. Your products can help a company or organization uniquely spread their name in a local or professional community, doing good work by sponsoring the creation and distribution of information that is valuable to people they want to serve. Measuring the return on the investment in this situation can be more difficult, if even possible. It is also usually longer term and not immediate. Yet the culture of the company or organization is willing and able to invest in your information to support their overall purpose. Delayed ROI. Whether mathematically calculated or positioned in the feel-good realm, it is also possible your products are positioned by your buyer as an intended initial loss that later prompts revenue or engagement of some kind. Rather than a bonus to prompt sales, it might be completely free as an introduction with no obligation. It could be a gift to test drive anything from a vehicle to a membership to some sort of service or product. The decision maker builds in a certain amount of loss as a cost of doing business, with an expectation that sales will be made sooner or later with those who test drove what was offered. Action. Anticipate various ways your prospective buyer can enjoy a return on their investment in your products and services, regardless of what format you deliver your bite-sized brilliance. Capturing and citing results of prior clients or others in your industry can put your buyers at ease, even though you state that the results others have had are examples and will vary from situation to situation. Turn your tips into products, your tips products into moneymakers.tm 2015.